Tesla stock, Tesla stock, Tesla stock. Holy smokers, this ain't no jokers. Another double-digit sellout here today. Wall Street's dumping shares so fast at Tesla, dumping them faster than you can say Happy New Year. Oh my word. We got to talk about what's going on with Tesla, not just today, but kind of what's going on here. A lot of people want to know where this stock's going to bottom. I'm going to share that with you. I made the biggest move in regards to Tesla stock that I have made since 2019 here today. Okay, I'm going to share that with you, along with so much more insight in regards to Tesla. As somebody that's held the stock for many years, took some insane profits from like life-changing profits, and now I am officially back to loading the boat as of today. Okay, so good old Tesla down another 12% plus here today. It was down to 104 at the lows here today. This stock is down over 73% in the past 1 year, and they're coming off of a record year for them, like the best revenues ever, the best profitability, the best margins. Everything is just flawless in terms of kind of like how they ran their business in 2022. But there are issues here in the short term that we're going to go over. This stock, as of today, the shares are the same price that they were back in August of 2020. So literally, if you bought Tesla stock here today, you bought at August 2020 prices now at this point in time. That's how insane this sell-off has gotten and how vicious this sell-off has gotten. That you can buy back at 2020 prices. And that was obviously a very scary time back then that a lot of people didn't know what was going to happen with the economy and those sorts of things. So it was incredible to see it fall to those sorts of levels. Now, do keep in mind, this isn't the only stock selling off back to August of 2020. If you look at a stock like Apple, this stock sold off another 4% plus here today. Apple just can't do anything right in terms of their numbers in the short term, I guess, and that's reflecting on the stock, right? People are very worried about what Apple's iPhone shipments are going to come in at and iPhone revenue and those sorts of things, and it's weighing on the stock heavily. And this stock is now back to August of 2020 prices now at this point in time. By the way, not time to buy Apple quite yet, okay? No. Obviously everybody has seen the report by now, and I covered that on my channel, right? The deliveries, the production numbers, all those sorts of things, okay? But I'm seeing a lot of people kind of, talk about the 40% growth year over year, those sorts of things. But here's a big part that Wall Street's really looking at. And if you want to know why this stock is down double-digit percentage here today, the real reason is this is a company that it's seen as the numbers are just going to keep getting worse and worse and worse. Because if you look at the quarterly numbers on a year-over-year basis, not at 40% growth, okay? And so what this company is showing is that growth is decelerating rather rapidly. And with a lot of obviously worries about the economy, the thought process is these numbers are going to continue to decelerate and continue to get worse. And the company's going to go from, 50% growth to 40% growth to 30% growth to 20% growth, right? And so that's the thought process that's starting to play out now. And I've been calling this out for the longest time now, right? If you've been watching my Tesla videos, I've been saying this is the problem. This is the problem. And Analyst just a few weeks ago, right? Because I would show this number time and time again in Tesla videos. Just a few weeks ago, Analyst had their revenue estimates at about 40% for this company for 2023. And this is an issue, and they need to bring down more, okay? Analysts are still at 36%, so they're starting to bring down their numbers. They need to bring it down more. This company's likely not going to grow at 36% this year. And Wall Street's trying to get ahead of this, essentially, because Wall Street is starting to figure this out. Analysts are super slow to react, but they all will react. And Wall Street's starting to realize, oh, crap, I don't think this company's going to grow at 36%. So what Wall Street does is they try to get ahead of that and they try to sell off, obviously, and it causes a mass just selling pressure of just vicious proportions on the stock, and that's how you get the stock down another 12% plus here today, because Wall Street's trying to get ahead of this. They know this is the issue, that the company's likely not going to hit those growth rates in 2023. They're going to come likely way under that, and Wall Street's starting to realize that, but without really stating that and without kind of freaking everybody out, right? Obviously, the stock price is just freaking everybody out. No, I was listening to some CNBC earlier, and it was interesting. This gentleman, he was trying to talk about competition, and like competition is the issue for Tesla stock price in the short term, and that's going to be the funniest thing I've ever heard. But I've been hearing it for like 100 years in regards to Tesla. He was talking about, I got an Audi, and I know somebody that has a Porsche, and they really like it, and so the competition's the problem for Tesla. And I'm like, no, okay. You want to know what the real problem is for Tesla right now? I'll show you what the real problem is. Okay, there's a few of them. It's multi things working against Tesla right now. And for a company like Tesla not to hit growth rates, you got to have a lot of things working against this company. This is the first, okay? Look at this. If you want to get an auto loan now, It's ridiculous. Like, you're going to have to pay the highest interest rates you've had to pay in 10 plus years. And a lot of people just aren't willing to do that, to be quite frank. If you have great credit, you're looking at still close to a 9%, 10% loan in terms of interest rate. I mean, if we go back to anybody, let me know if anybody has good credit and you got an auto loan in 2021 or at the beginning of 2022, what was your interest rate? I can almost guarantee you if you have really good credit and you got an auto loan in 2020, 2021, or early 2022, your interest rate on your auto loan is likely 2 or 3%, somewhere in the 2s and 3s, likely under 4%, okay? Now, if you want to go get an auto loan today, you're paying 8s or 9s, that same exact person, okay? And that obviously changes your payments in a substantial way. So a lot of people, even with great credit now, are looking at autos and just like, I'm not buying right now. No, I'd rather just buy, or drive whatever I got to drive right now, because it's just the interest rate is not conducive to doing something like that right now, right? I mean, even somebody like myself, like if I was to go get an auto loan right now on a vehicle, I'm going to have to pay, those type of rates. That's ridiculous. Like if my other 2 Teslas, I have loans on those, and those are like 2s and 3s. So to all of a sudden consider like, I'm going to go buy another car right now and it's going to be at a 9% interest rate, 8% interest rate, like that's just, you can't even no, that's absolutely ridiculous. And so this is going to be working against Tesla for quite some time. And this is the majority of like, if I had to guess, this is the majority of Tesla buyers is kind of in those. Never mind the lower, oh my gosh, you are getting so wrecked. It's not even funny on kind of those ones down there, right? This is a huge issue for Tesla. And it's not just a huge issue for Tesla, but it's a huge issue for the entire economy right now. Going into 2022, we were in a great position in terms of people having savings. Then we kind of went down to normalist ranges and we had a sudden drop. And now we're like pretty much in the worst situation the United States has ever been in terms of savings rate, at least as far as these numbers have been calculated, which goes back decades and decades and decades, essentially, okay? This is a huge issue for the overall economy and for the overall stock market. If people really have this little money, like oh boy, okay, in terms of savings rate, that's bad. That's bad, okay? The next thing that's hurting Tesla in a massive, massive way is what you're looking at right in front of you right now, okay? The Michigan consumer sentiment. The sentiment's been awful. I mean, pretty much for the past 6 months, we've been at among the lowest sentiment from consumers we've ever pretty much seen, okay? And so if sentiment is that bad, people don't want to just go make big ticket purchases. This is something I've been talking about for the longest time, okay? I mean, I feel like I was talking about this all the way back in January 2022 when I put out my, planning for a recession video, right? At the end of the day, if people are more uncertain about their financial future, they're gonna bypass on big ticket purchase items. And the biggest ticket purchases that people make are homes and cars, okay? That's always consistent. Homes and cars. Other things get hit as well, furniture and all those sorts of things. But the big ticket purchase items, that's the thing that people say, you know what? I'm gonna wait right now. I'm not in the market to buy a new home right now. I'm not in the market to, buy a new car right now. I'll live wherever I'm gonna live. I'll drive whatever I drive, and that's fine for right now, okay? Talk to me in a year from now. And that's the way a lot of people are kind of taking this approach right now. And so this obviously hurts a company like Tesla in a massive, massive way when you got that trifecta all working against the company at the same exact time. That hurts. That hurts major, okay? Then, to add insult to injury, used car prices are starting to fall off a cliff, which I'm very happy about, and I think that's healthy. I think that's been, there's no time period where it was normal for you to be able to go get a car, drive it off the lot, drive it for a year or two, and then sell it for a profit. There was never, ever a thing. Never. That was the most freakish thing ever, okay? And that is a bubble. That's just waiting to be popped, right? And it's starting to pop now, and it's going to get worse. And so, with all the Carvana situations, you can have a lot of these auto companies go under and have to sell assets at pennies on the dollar. The used car market will get worse before it gets better. And that is something that hurts Tesla at the end of the day, right? And if you look at used car prices for Tesla, they've dropped substantially. I mean, substantially. I mean, we're talking $10,000, $20,000 on a lot of models now at this point in time. And that means now if you're going to buy a Tesla, you have to consider buying used. There was a long period of time where it was like it didn't make sense to buy a used Tesla unless you really desperately needed one because it was like hardly a discount versus buying a brand new one. Now at this point in time, if you're in the market for a Tesla, buy a used Tesla. first and foremost. And then, that hurts me as a Tesla shareholder, but I'm just going to be honest, that's the better financial advice, is right now, if you're in the market for a Tesla, buy a used Tesla because you're going to get a way better deal than buying a new Tesla right now. That's just a bottom line with that. People are desperate. I mean, I've seen some people sell some cars at, recently that I'm just like, wow, they sold that Model Y at what price? They sold that Model 3 at what price? Like what? But at the end of the day, if people need to sell, they dump at whatever price, right? And, all these companies are not really looking to buy a lot of used inventory right now because they know what's coming here, okay? Now, the important thing to remember is this is for the long-term investors here. Everything I just went through with you there, okay, all these things that are hurting Tesla right now and will hurt them over this next year, those are all short-term things. Those interest rates won't stay up like that forever because eventually the economy is going to really start to fall off the rails and the Fed's going to have to lower rates, right? Which will obviously bring down, that amount. The consumer sentiment has started to improve and likely will continue to improve as long as we can keep inflation in check. So that's something that eventually is going to work for us rather than against us, right? The used car market, it's got a lot of pain ahead for the next 6 to 12 months, but that will stabilize as far as that goes. And so all those different factors I just took you through there, those are all short-term things. And they are absolutely hurting Tesla for this next 6 to 12 months. But they will erode, they will go away, and then the long-term focus will get back for Tesla, obviously, and the company will prosper and grow into the future, okay? Now, in regards to Tesla, I just bought a lot of shares here today, okay? The most shares I bought of Tesla in a long time. And I've been somebody that's been very patient with Tesla. I took some incredible profits in the stock in 2021, 2022. I sold most of my shares, right? I mean, the stock just got up to insane valuations that I felt like the risk reward wasn't as appropriate, right? So I took some, in my opinion, like life-changing profits, insane, right? But now I'm looking to buy back every single share I ever sold of this stock. And it's going to take me probably a year to do it, but I'm going to do it over this next year, essentially. And I want to buy and buy and buy and buy in this stock. And I'm going to show you what I just bought here today in regards to Tesla. And I stayed patient with this one. That 73% fall there, I bought a total of a little over $2,000 worth, which is literally nothing for me. A little over $2,000 in that whole 73% drop. But now things are different. Now is a time to start loading the boat on this stock, from my perspective at least, right? And I'm planning to for the next few months, essentially, okay? And so here today, I started on this path. And today, I went ahead and bought 145 shares of Tesla stock, which is the biggest move for me in Tesla in a long time, okay? This is the only Tesla shares I bought since 2019. That's all I bought. Literally 20 shares right there, right? Until today, I bought 145 shares of stock. And my plan is to continue to add aggressively Tesla over this next 3 to 6 months while it kind of is trying to find its bottom, essentially, okay? Which leads me to the next subject, which is this PE ratio. This stock is now trading at a PE that a lot of people never thought this could happen. A trailing 12-month PE of 33 on Tesla. Now, 33 for Coca-Cola, people are like, whatever, okay? 33 on McDonald's, I guess people are okay with paying that, which is crazy. But a 33 trailing 12-month for Tesla, a company that has ridiculous growth for the next 5 to 10 years, is downright silly. Downright silly. But that's where the stock is trading at now at this point in time, which is why I've taken the liberty to go ahead and start adding the stock aggressively now at this point in time, and I plan to continue to. Because the valuation metrics are so out of whack on Tesla now at this point in time that it's starting to get laughable, literally laughable now at this point in time in terms of how this company's trading. Now, this is my bearish case for Tesla. This is my bear case, not my ultra bear case, but this is my bear case. And this also shows you why I'm so excited to, start loading the boat on Tesla stock here, essentially, okay? In my bearish case, I have been growing at 22% per year. That's horrible. For Tesla, like Elon wants to grow the company 50% a year. So 22% would be very, very, very bad, okay? Very bad, very bearish. For the next 5 years, I have them growing net income less as a percentage than revenue, which would also be horrible for the company. Because this is a company that's consistently proved over the past number of years that they can grow net income at a much more rapid clip than revenue. And so for them to grow net income slower than revenue, that would be, once again, disaster. That's bearish, okay? But even in my bearish scenario, I still have this company. If you were to value it at 30 PE, which I think is very fair for this company if they're growing like that, never mind a 40 PE, at somewhere between roughly a $970 million or $970 billion market cap and about 1.3 trillion. And that's in my bearish case for 2027. So that's why I'm looking at this stock and I'm like, I've got to start loading the boat on this one again. And I've got to build this position up aggressively over this next 6 to 12 months because I don't have all the time in the world. I got a 6-month window here, maybe if I'm lucky, a 12-month window here to add this stock aggressively because I'm looking at it at a 300 billion-ish market cap and it's basically a 3x, 4x type opportunity on my bearish scenario. Never mind my base case, never mind my bull case and those sorts of things, on my bearish scenario. So that's what's so attractive to me in regards to good old Tesla Maesla here and why I've got to go ahead and pull the trigger. Now, a lot of people are trying to figure out, where's the bottom for Tesla? I've heard a lot of debate out there around $50 to $60. That's where a lot of people say this stock's going, right? And I've talked to a lot of folks. I just kind of hear opinions out there. A lot of people throw this $50, $60 out there, okay? And even my son, my 8-year-old today, he came up to me and he saw that the stock was down. He said, Dad, you think Tesla's going to go $50? I don't know why he said that, but he said that. And then my 5-year-old said, he goes, I think it's going to $1. And then my son goes, $1? Dad, any stocks even go to $1? I said, son, half my portfolio is $1 a share. Like, what are you talking about here, man? I'm the $1 king. Okay. Oh boy. Okay. No, in all seriousness, $50 to $60 a share. I don't think super realistic, although I would be happy, super happy if it went down to that as somebody that wants to buy the stock aggressively over the next 6 to 12 months. I don't see it happening. What I see happening, and I've spoke about this before, is I see $90 to $100 range for the stock in kind of that bottoming out process, in my personal opinion. If it goes to 50 to 60, like I said, I will take every share in sight. Thank you, thank you, thank you. But I don't see it happening. I think 90 to 100 is where the stock ultimately bottoms, and I think you're going to see aggressive buying pressure. The sharks are coming in, the whales are coming in, if this baby goes under 100, in my personal opinion. But like I said, I wish, and we can all wish, but don't hold your breath on that. That's all I'll say about that. The whales and the sharks will be there to pick up shares under 100, and they will do it rather aggressively. So that's good old Tesla Maesla, folks. Hope you enjoyed today's video. As always, I also made a free course for you guys that's going to be accessible through the pinned comment down there, and I can go ahead and text that over if you're looking for that course. It's absolutely free. Hope you enjoy it. Much love as always. Appreciate you. Focus on the long term, and have a great day.